oversold conditions, very negative positioning and sentiment. What have you been doing this week?
Well, holding on. We've been moving our clients for the last 3 months into short, high-quality bond ladders, not at the expense of equities. We still have pretty significant exposure to dividend growers. I've been running dividend growing strategies since the mid-1980s, Sarah, and this is a time when they shine. Not only do they provide some hedge in your income against inflation, but also protection in declining markets. And then around the edges, we've been adding to some of the higher quality growth names in our GARP strategy, because we think when all the dust settles, you are going to want to own some of these companies that can deliver growth reliably, and their multiples have come down pretty dramatically. So we're finding some attractive names in that space. But you don't want to get too far in front of this. We've raised a little bit of cash over the last couple of months. We aren't fully invested, so we're not market timers with cash. We use our asset allocation to make those decisions. But when you have some gainers like a Palo Alto Networks, you kind of want to take some of that in an environment like this.
Let's hit Micron, because interestingly, it is in the green today, and it's actually up 2% this week. The company beat estimates for earnings, missed on sales, issued weaker than expected guidance, but CEO Sanjay Mehrotra was upbeat that demand will improve soon when he came on for an interview on Squawk on the Street. Listen.
In calendar year 22, smartphone and PC demand has come down significantly versus the expectations in the earlier part of the year. We do project that in calendar year 23, the smart China will open up. Post-COVID, China economy should rebound. I mean, over the years, you've seen you can never write off China. As well, that will bring back some of the demand trends on smartphone and PCs.
Micron also cutting its capital expenditures. They're cutting utilization. Why is the stock up? Nancy, are you a buyer?
No, we're not. Listen, I admire CEOs that get in front of the camera after a disappointing earnings call. But, we've been paying attention to a lot of the CIO surveys that show that most CIOs, and to the tune of 86% in a recent survey, are increasing their software spend in enterprise, or enterprise CIOs are increasing their software spend, and 58% are decreasing their hardware spend. So while I think the consumer will return, and that will help their handset and smartphone business, I don't think this is a place where you necessarily want to jump in right now. We think a name, one of the top spend names in that space or in software between now and 2025 is Microsoft. It garnered, according to the CIOs, 27% of spend. So I think you want to stay with the industry leaders with a bias towards software and enterprise, and then, of course, cyber.